Aloha everyone. I hope you're having a wonderful weekend. I'm going to try to not make this video too long, but there's quite a few things we need to go over. First off, I know it might be a little surprising because on Thursday you saw me state that we're now under a sell signal. There are no more long positions. I want to make this clear. There should be no more long positions taken by subscribers or members if you want high reliable signals. Now listen, this entire uptrend has been weird the entire year. Whenever you hit new highs, you should just keep on moving to new highs. Early in 2017, I got to go look at the other indexes really quick. Let's look at the S&P 500. We kind of did that at first. In 2017, we broke out, but we pulled back a little right to the pivot point, but then we did move higher. But then after that, every time we broke out in February, sell off. We attempt to break out here in May, sell off. We break out here in June, go nowhere, start to roll over. We break out here in July, go nowhere, roll over. This has been a consistent pattern all year. So it's not like now that the market's selling off, oh, it's just another great dip opportunity. Once again, once we got through the first part of the year, we try to break out, sell off, break out, move up a little, sell off, move up a little after we break out, sell off. Can't even break out, sell off. Break out, go nowhere, sell off. That's not healthy action as you hit new highs. Once you hit new highs, we should zoom higher. Now, I don't think that we're going to start a new bear market. We might, but this will be the first time. It's not the first time, but this will be the first time a significant bear market starts without the yield curve inverting and or us having a climax run into the highs. If you're going to have a bear market, normally you get a climax run to the highs and or an inverted yield curve. Most of the time, like in 2000, 2007, you get a climax run in a lot of leading stocks and an inverted yield curve. So this is a little bit different. But the main thing is that the market is weak now. But it's not like I said, this uptrend, just show you how it's not healthy. Look at the amount of stocks over the 200-day moving average. Ignore the candlesticks here. Just look at the overall trend. Remember how after I said after that February move in in the two indexes, S&P 500 and NASDAQ, that I showed you how every breakout failed? Well, look at the amount of stocks above the 200-day moving average, what they've been doing then. It's been downtrending, marking a series of lower highs and lower lows ever since February. That's been negative divergence the entire way. It's one of the most clear internal negative divergences I can see on a longer time frame that hinted to this weakness coming. But not only is the amount of stocks under the 200-day moving average been weak for a long time, on the other end, the advanced decline line has been fabulous in the NYSE and NASDAQ, which has helped offset this weakening stocks above the 200-day moving average. It's quite a weird divergence to have, by the way. NYSE, I think I do have a line here. Let's see if I can pull it up from the stock charts. I think I happen to have it up. Awesome. So you can see during that entire time, after that February high, there's that swoon. The 200-day moving average, stocks above it never recovered. But as you see, the NYSE line just steadily moved higher. Well, now it's completely rolled over. The NASDAQ advanced decline line has rolled over and broken below recent support. We're still above it here. Now, the last time that happened, we found support and moved higher. Maybe we'll do that here. It's still too early to call. But the reason why I'm taking new long signals, despite us being under sell conditions, is because I know how to size properly. My commissions are extremely small, even to a 0.25. Even if I put only 0.25% of my account capital into a stock, I'm putting right around $1,000 to $2,000 into it and paying only $1 in commissions. That's why it can be done on my end. Plus, I have all Maui evening to check my stocks. Hours and hours and hours to go through my stocks on an end-of-day basis. So I can trade the way I trade. But if you're undercapitalized, and or pay more for commissions than you would like to because you still don't have an Interactive Brokers account, which you should if you're going to do this, then it's probably best not to trade here because we're under a sell signal, a soft sell signal. And now let me explain that. Look at the NASDAQ. You see the NASDAQ, how it's just below the 50-day moving average? See how it's not below the 200-day moving average? Okay, when every index is below the 200-day moving average, it's a hard sell signal. New long positions probably shouldn't be taken unless the signal is great in an extremely strong sector and extremely strong stock in that sector. that's bucking the market trend with multiple stocks in that sector confirming, and hopefully you have a follow through day. But with us under a soft sell signal, I'm willing to buy the dips in stocks that offer at least greater than 4 to 1, preferably greater than 5 to 1 reward to risk ratio, which all of these stocks do tonight, that I'm going to go over, by the way. And as long as a stock I risk less than 5% of whatever capital I put in that trade, doesn't matter if it's all my capital or 0.25%, I just want that stock to have less than 5% risk in it if I'm wrong. So until you see all of these indexes below the 200-day moving average, whenever I get excellent 5 to 1 reward to risk opportunities with tight risk parameters, I'm going to take the trade knowing that more than likely 3 out of 4 are going to fail. However, the one that succeeds, because we're risking so little on the ones that are wrong, it should take care of the 3 that are wrong. So let's really quick go over. Now remember, add signals can always be added. It doesn't matter what the market conditions is. If I'm already long in stock and I get an add signal, it's good to go. This is regarding new long signals. So the first stock that showed up on my radar was ALRM. ALRM, 99 composite rating in IBD, 98 EPS, 94 relative strength. It's an earnings winner right here. Pulled back, lighter volume the next day. The bullish intraday candle hammer pattern on strong volume with BOP confirmation of pocket pivot point signal. Bad market or not, this is such a high quality CanSlim stock and an earnings winner. I got to take it. Now here's how it normally would go. ALRM is a CanSlim stock and was confirmed in my price volume BOP scan. So during the previous condition, that would be 3%. In the most strongest tape, it's 2.5 to 4%, right around there. But in this tape, it's 3%. 2% for CanSlim, 1% for BOP. Now, since extended from the 20-day moving average, it's halved. That's 1.5%. Now, since we're under a sell signal, it's halved again. So it's 0.75%, but still, it's a soft sell signal. So to me, anywhere from 0.75% to 1.5% of my account capital, probably more around 1% of my capital is going to ALRM. Limit order, 40.80. First cut loss, maybe your only cut loss if you take it, 39.50. Final cut loss, 38.03. With every single one of these longs that we're going over, if the first stop fails, it loses its green BOP or sells off below this low on above average volume, all of the stop gets raised. If it sells off below this level with green BOP, below average volume, no matter what, but doesn't hit this low, half of the stop gets raised. So no matter what, if the stock goes below the first low a day on all of these names, no matter if it's green BOP, low volume, heavy volume, red BOP, yellow BOP, half to all the stop gets raised. There is no giving it even low volume pullback, growing BOP, give it all the way back to here. There is none of that under a sell condition. We have to start raising stops. So ALRM, 40.80, 39.50, emergency final stop, 38.03. Then there's SPR. SPR's CanSlim was in my price volume BOP scan and BOP 5 scan. So with it being extended from the 20-day moving average, it would normally be a 2% position, but since it's a sell signal, it's 1%. Also, 94 composite, 88 EPS, 94 relative strength, gotta take it. SPR, limit order, 68.91. First cut loss, boom, 68.35. It fails 68.35 on heavy volume. Whatever the next low day is, that's the final stop. If it's on lower volume, half the stop gets raised or whatever. The final emergency stop, 67.01. Once again, way less than 5% risk in this stock, just like ALRM. Then there is INVH, another earnings winner that's also combining with a Starwood Group stock to become one of the biggest landlords in America. I'll go long on that stock since that's the way this country works. INVH, earnings winner, nice hammer reversal candle pattern, want to get long, 21.92. First cut loss, 21.60. Emergency final cut loss, 21.11. Pretty clear cut. Then there's GoPro, earnings winner, pullback, max green BOP, bounce, reversal hammer candle pattern. Want to get long, 9.88. First cut loss, 9.61. Final emergency cut loss, 9.31. 9.61 goes on heavy volume. All the stop gets moved up. If it loses this low on low volume and or just with green bop, half the stop gets moved up. Rinse and repeat. Ad signals, TPL. TPL, this is a larger ad signal. Can slim quality, perfect speculator quality, earnings winner, and it was in my max green bop scam. Me, I'll just be putting anywhere from 1.25 to 2.5% of my capital in it. Want to get long. 359.93, first cut loss, 354.10, final cut loss 351.95. That's extremely tight, isn't it? Doesn't get much tighter than that. So I need to see this thing work immediately or the ad signal's gone. Once again, if this thing works, I get a measured move greater than 5-to-1 reward risk ratio compared to the loss. Got to take it. And then CHGG shook me out of a third yesterday, or excuse me, on Thursday. I want to buy it back and do an ad position with the above average volume and still keeping the max green bop and the successful candle over candle pattern. Want to add to CHGG at 1503. First cut loss 1465, the low right here. Final cut loss, emergency cut loss if it fills the gap at 1405. But those are the long positions. They're all pretty solid signals. They're just all extended and they're all under a sell signal market. So the chances that they succeed are very low. However, if this was just a one-day sell-off and Friday is going to turn into more than a dead cat bounce, these are going to all do very well as they are all earnings winners and appear to have brand new price levels to be working from. We'll see how they turn out. All right, everybody. Great luck during the upcoming week. Aloha.